Should you do the opposite of trend following? Hi, it's Charlie giving you today's video. I had a question come through and I'll read it out to you. And it said, Charlie, what do you think about a reverse trend following strategy? If an average trend following strategy has a win rate of, it's saying here, I'm reading off my phone, 33%, doesn't it mean that I have to let my winners run to pay for my losers? Yes, that's correct. And if I don't let my winners run by capping the winners at, say, 1-to-1 risk to reward, so I'll put that down for now, will I have a losing strategy? And if I do the reverse of that strategy, I will then have more winning trades, excuse me, than the losing trades. 67% winners, as he's saying here. And I would be profitable, he said. This idea just pops into my mind, etc., etc. Okay. There's a couple of things to comment here, and that is, yeah. Firstly, if you have a strategy which a trend following strategy with a 33% win rate, which may, let's just for argument's sake make this up, previously had a 1-to-3 risk to reward ratio. Let's just assume that it has a fixed risk to reward ratio. So, and you say, well, okay, I'm not going to do that, and I come out at 1-to-1. Well, if you come out at 1-to-1, then obviously you will be losing money. But the stats don't change. They are dynamic. The stats do not change just because, when you have a 1-to-1. The fact that this has a lower win rate is because when you get in, let's say here, you're holding on to it for longer, which means that some of those trades are going to roll back over. So the fact is, if you had a risk to reward of 1-to-1, these stats would increase. Your win rate would go up. The whole reason this has a low win rate is because you're trying to hold on to the trend. So in fact, that's not a truth there. If you go to 1-to-1, this might actually, I don't know, it depends on the strategy. In theory, it could go to a 55% win rate, and then you're actually making money even with a 1-to-1. Now, the question was, well, if I reverse this strategy, then, and I do the opposite, so instead of buying when it says to buy, short it, let's say, what he's saying is he would then be right 67% of the time. Yeah, what he's missing out is you wouldn't be right 67% of the time because you still have to have a stop loss. So if you're doing the opposite, so if you've got a breakout strategy, which trend following strategies often are, well, you've now got to figure out, well, where you're going to place your stop. So you wouldn't have a 67% win rate because you're going to get, you've got to allow for it to come up. So let's take the trend following strategy, which is a breakout strategy, let's say. So the breakout strategy is here, okay? Now, it has a 33% success rate because it's trying to hold on to its trades right over to up here, let's say. Okay, so some of those trades are going to roll all the way back over, and they will have gone up a bit, but they end up rolling over and stopping out. Hence why giving the 33% win rate. But some of them will end up going up to the target, and it makes money overall. Now, his theory is, well, instead of buying at this point, why not just sell? And then you'll be right 67% of the time. You won't be, because somewhere you've got to put a stop loss in. So even if you've got a stop loss here, you're still going to end up having more, stop outs, which might mean it's not a 67% win rate, because you've got to allow for all of these times that it actually has quite a good run. It might have a good run up to here and then roll all the way back over. So it's not that simple. Trading isn't that simple. I wish it was. You can't just reverse something, because you've got to also look at, well, by all means go back and back test it and say, well, if I back test it and I back test with a given stop loss, then what is the win rate and where is your target? How's that going to work? Because it might not run down enough for your targets either. Might not be even successful at all when you reverse a strategy. So my main point is, by all means, go back and back test something like that, because the concept is right, but it's not as simple as that. You've still got to have a target even on the inverted one. A point where you exit, and you've also got to have a stop loss. So it won't give you a 67% success rate. It's going to be less than that, and it may not even be profitable if the target can't, when you back test it, isn't successful for the strategy. My main observation with this is this gentleman is looking for a higher win rate strategy. So I understand that newer traders find it difficult to have low win rate strategies like that 33% one, but if you keep looking for the holy grail of a higher win rate strategy, ultimately you end up just losing anyway, because you go down a rabbit hole of chasing higher win rate strategies, which these tend to fail and fade over time. So look for a strategy. 33% may be a bit low for a lot of people, and that's fine. So you don't have to have the lower the win rate typically is associated with a higher risk to reward, because you're trying to hold on to your trades for longer. So look for something in the middle. So somewhere 40 to 60% range, maybe win rate, a 40 to 60% win rate maybe range, somewhere within all of that, and then so you're not going to be trying to hold on to your winners forever, but maybe more around the 1 to 2 risk to reward may be better for someone like this chap, and that may give this chap somewhere maybe a 40 to 50% success rate, and that's still a highly profitable approach to the market. You still got to find the actual strategy, of course, but to give you some sort of guidance, a 1 to 2 on average risk to reward is very good. And if you could couple a 1 to 2, even with a 40% success rate, you'd still be doing very well. So if you get any more of a success rate out of it than that, even better. So it gives you a little bit of an idea on the sort of stuff to look for. But looking for the high win rate stuff, especially the way that he's thought about it today, doesn't actually work. Hopefully that gives you some food for thought there. I'll see you on the next video.